Hi, good morning, and welcome back to today's market update. And today is Thursday, October the 6th. The time right now in Singapore is 11:41 a.m. And overnight, we can see that on Wall Street, there was an attempt to actually starting to continue its rally from the last week's low. Okay, so the market actually managed to go higher. As far as Dow Jones is concerned, it managed to register a week's high at 30,454 in the cash market, but it couldn't hang on to all its gain, and eventually as the market closes, it closed below the 50% of the previous day's trading range. Okay, so the market closed at 30,273.8. So basically, that means the market is digesting this very aggressive 2 days or 48 hours of counter relief rally. Okay, so the story behind it, of course, was the belief that because the Bank of England has actually made a policy U-turn as far as the tax cut is concerned, and that is seemed to be like very much in line with what most analysts was talking. At some point, central bank will have the pivot. Instead of raising interest rate, they may have to start to cut interest rate and from quantitative tightening to back to quantitative easing, which is exactly what the Bank of England did when they said they were going to buy unlimited amount of yield, which is the equivalent of treasury bonds. Okay, so yesterday they did not buy any because they say that they have rejected all auction prices. So this gives rise to the expectation that maybe the Federal Reserve would also do a BOE Act, which is to pivot from quantitative tightening to quantitative easing. That causes the markets to rally so aggressively over the 48 hours windows from Monday to Tuesday. And yesterday, the market started to digest that maybe this is a little bit too optimistic an outlook, because yesterday we have the release of the ADP number. They expected 200,000 new jobs created. It came up 2,003. So it was slightly beyond market expectation. Now, this proved problematic because if the narrative about the Federal Reserve wanting to destroy demand, they must see a collapse in employment, but we are not seeing it as far as yesterday night ADP numbers is anything to go by. Of course, the big one will be tomorrow's night. We have the non-farm payroll, and if the unemployment rate start to rise, then that will give rise to the expectation that maybe this narrative will be back in play again. That means to say this narrative about at some point the Federal Reserve will have to pivot. Okay, but right now, based on yesterday night ADP number, we don't see any of those narrative being extended. That maybe causes the price to come back down again. Okay, but this, I believe, is a technical pullback. Last night's decline is possibly a pullback to give us another chance to re-anchor a counter trend position. Like I said, I have not participated in the this week's rally. Okay, but now that the market has rallied and pulled back, it may give me a technical opportunity to look for levels to position a speculative long position for another rise. Okay, and that rise could possibly be caused by tomorrow's non-farm payroll release. Okay, so that is what I'm trying to do. Okay, as far as the S&P is concerned, S&P 500 did the same thing. It registered a week's high at 3,806.9 before it closes about below 50% of the previous day, which is Tuesday's trading range. Excuse me. And this create the condition in as far as I'm concerned, maybe a pullback to give me a more realistic price to get into the market. And if the market can actually come back, pull back today, maybe to somewhere around here, okay, I will have to look closely at the lower time frame, maybe the 3 minutes chart. Okay, if it can pull back somewhere near the 3,722 levels, maybe that will give me the opportunity to actually position a long position for another rally higher above 3,009. Okay, so that will be a very short-term kind of play. Okay, that is just to let you know what I think I will be doing. Okay, as far as the Nasdaq is concerned, the pullback wasn't that fantastic. The market actually on the you can see this is the hourly time frame. Market actually registered a week's high at 1647, and it pulls back, but it pulls back even on a daily basis, it pulls back even lower than Tuesday's activity. You can see this pullback is actually a very negative development because this is an outside bar on a daily time frame, and this means the market is not very strong in the Nasdaq. So that's the reason why I'm not looking at Nasdaq 100 to do this counter trend trade, more on the S&P 500, because as far as the Nasdaq is concerned, whether on the way up or whether on the way down, it doesn't seem to have the trading range that is as attractive as the Dow Jones or even the S&P 500. So my focus will be on S&P 500, at least for the remainder of this week. Okay. Over in Asia, we can see that the Hang Seng market, yesterday we managed to register a high of 18,164.2, and then this morning itself, at least in the first half of the trading day, the market did not attempt to trade even higher. In fact, it's pulling back. But because all Asian markets are reactive to New York closing, so it does give us a slight disadvantage, because at the opening, depending on how Wall Street closes, Asian market will tend to react and then it will jump. Okay, it means it will gap. When it gaps, it doesn't give me the chance to actually participate in the price range. Okay, so it's definitely a more reactive market and not something that I actually favor trading. Okay, over in China is still having their week-long Golden Week holiday in celebration of the National Day. So we won't be talking about the the Shanghai Composite. In fact, we will shift our focus to look at the Nikkei. Nikkei 225 this morning, despite the corrective pullback on Wall Street, this morning the Nikkei actually burst beyond what I would think is an immediate barrier to higher prices, which is 27,300. The market went up this morning to as high as 27,391, and it has since stays basically northward of 27,300. So this will remain to be seen whether it can close beyond this barrier. If it can close beyond this level, there is always an extension possibility of an extended relief rally. So we want to watch this thing. Okay. Over in the foreign exchange market, the dollar is very quiet as far as the dollar yen is concerned. The market has been stuck, okay, between 145 to 143. So basically, the market has been trading very, very narrowly, and I think it's gearing up for another run up beyond the year's high at 149. 145.90. Okay, there's every chance the market will take up 146 because if the BOJ is going to come into the market, they see that their massive amount of intervention only result in one day in which the dollar pulls back and now is back to where it was before the intervention. I think they will not come in at this current moment in time. They will probably re-enter the market to intervene at a much higher level, because at this level it seems that it is not working. And it will help if this intervention is a coordinated, concerted central bank intervention. But on its own, BOJ does not have the financial muscle or the psychological impact that you hope to get to scare away speculators. So based on that, I think the fundamental do suggest that we are likely to see continued dollar strength. The immediate target will be 147.67, which is a 1998 high. So this will be the immediate level to watch. 147.67, not that far away. We are looking at maybe 2 yen away from the most recent high, 145.30. Okay, so not that far away. Maybe the market will go there. And if the market can stay and blow away this level, the next level will be 160. 160, which is 1990s high. So we are looking at a 32-year high, possibly. So I think this is a more sensible level for the BOJ to come in to intervene, because it's a very, very nice round number. Okay, so maybe the next intervention level will be somewhere around 160. Okay. Over in sterling, we can see that the relief rebound after the U-turn by the UK government on the tax cut from 103.50 go all the way to almost 115. Okay, so that is a very, very big move, more than 1,200 point move, and the market seems to have been losing some momentum. So as far as this is concerned, there's a risk because of yesterday's pullback. Actually, you can see that the market closes very close to Tuesday's opening price. It means in the short term, the market may actually come off a little bit, but this means is the relief rally technically over? May not necessarily be the case. I think there is always the possibility in which, let me see, the possibility that the market may pull back a little bit more. Okay, whether it can continue to advance, we will have to see. But technically right now, as far as the short-term outlook is concerned, I think there is a risk for the market to go down to 110. Okay, 110, if you go down to the 1 hour time frame, 110 is not that far away. I hope to see a three-way pullback. If we get a three-way pullback, assuming this is how the market develops, okay, then there is the possibility of market coming to 110. 110 is around this cluster of prices, and this is where I think if I can reposition again on the long side, maybe I will get a chance. Okay, 110. This is the leg that maybe the market will be going to. Okay, okay, 110 area. Okay, so if this higher holds, maybe it will start to drift lower. Over in Euro dollar, I have already positioned a short just an hour or so ago. Okay, hopefully this is where I have two pending limit order to sell. One has been filled. The other one, I think, is still pending. I have not checked. The likely scenario is very similar to sterling. I think the market will probably drift back in a three-wave pullback, ideally to the 97 cent level, because you can see the market is obviously having problem clearing the parity level, which is $1. So it couldn't go beyond $1. It pulls back. I think this one will actually see the market pulling back to 97 cents, and that will be a great place to actually consider a long position. Okay, for another challenge of parity level. Okay. Uh, so, okay, this is what I look at. Maybe we look at precious metals. Precious metals is also seeing some kind of a pullback after the very impressive run-up in prices lately. You can see that the prices is also unfolding in this manner. I also have left an order to sell. I have one order that's been done and one more limit order that's pending. Okay, so ideally I want to see a three-way pullback, ideally go back to this area, which is about $1,695. Okay, so this is the idea that I want to buy. Okay, because you can see the market is very bullish. Okay, so if the market can drift back to 1,695 area, I think become very attractive to look for buying position for an extended rally beyond this week high of 1,729 and 50 cents. Okay, so this is the immediate outlook. Sterling has silver has been very volatile. Okay, maybe as far as silver is concerned, maybe we probably will see a deeper pullback because the market has been very, very strong on the upside as the market started to recover. So if this is the case, maybe the market can come back to $19.50. And if that's the case, this is where you can see this is where the market started to move vertically up. So it is this cluster of prices is where the market originate. What I mean is that the rally actually originated. So if the price can drift back to this level, which is $19.20 to $19.50, they become very attractive from this perspective of where the rally actually started. Okay, so if this is the case, look for this opportunity here. Okay, then as far as Bitcoin is concerned, Bitcoin also have seen a slight has seen a rebound. Basically, our market now is challenging yesterday's high of 20,469, the highest traded so far this morning. Let me see where's the price. It was at 20,441. Immediately, I think the barrier to higher prices will be 20,526. The market can actually go beyond and actually close today beyond this price. I think it will lay the condition for an assault even higher. But my target range is for the time being is 20,685 to 21,290. So this bracket of prices could possibly be what the market can do for timing unless something changes. So in the absence of new catalyst, I think this is all the market can do. Ethereum has also rebounded. You can see that Ethereum was not able to take out the previous high of 1,401.70 cents, and right now today it managed to go up as high as 1,383.70 cents. But the true test will be at 1,405.50. The market can go beyond this and stay beyond it and close beyond this price. It will lay the condition for a higher price assault. But basically, again, my target is at 1,436.30 to $1,485.70. So this bracket is where my target is in the absence of new input that will cause the market to move beyond this price. Okay, unless something comes into the market to excite the market to give it new cost. Okay, likely if the market is drifting, then I think that's all you can do for the time being. Ripple is doing okay. Ripple managed to test back to 50 cents level. Of course, we know so far at the end of last month trading, the high traded was 0.5095. Okay, that's all you can do. But I think at this price is already almost a target. Okay, my target is actually at 52 cents to 55 cents. So if the market can extend higher, that well and good. But I think this is all that you can do for time being. And Polygon is actually quite good. Now, I missed this move altogether. Polygon has been highly been going up from 71 cents to 86 cents. All the while, I wasn't watching this move, and now I regret it because this move is very sustainable. But at this current price, it's no longer useful to continue to go in to buy right now because the immediate barrier to me is at 87 cents. So right now, it's very, very close. We'll wait for the next opportunity. But so far, this I like the gradient in which this market has been going up because it's 45 degrees and all 45 degrees, whether it's up or down, they are very, very sustainable. Okay, so they are very durable. But we can't go back and to this trade. Now, the other one that's doing very well right now is this Ethereum Classic. Ethereum Classic actually broke out of a ranging market. You can see the market has been trading somewhere around $26.50 to $28, and the market effectively broke out of this level this morning to a high of $28.93. Now market is pulling back to this same where the previous resistance is now becomes support, right? $28.28 now becomes it looks very good for another extended run, okay, because the market has broken out of a range. So the market has decided that you want to reprice itself at a higher level. Maybe it will be able to do so with a target at $30.22. Okay, so there you have it. So for today, I think that's all I will do, and I will see you again tomorrow. Bye bye.